right? After this, you have edited, you click on next. Right, we said when you are going to be the supervisor, you are not going to change anything. Go to next, or you can as well also click on OK. Some machines will be giving you errors or it will be refusing to continue. Just check at the bottom of your taskbar. You click on this green icon, click OK, green icon again, click OK. It will take you to the next step. We said our username is going to be your first name, the first letter of your name, and first letter of your surname and your name. Are you together? After that, click next. We are taken to financial categories. Are you together? We are now on financial categories. We're having unallocated balance sheet. We no longer call a balance sheet today. What is the new name for the balance sheet? Statement of financial position. If you try to write statement of financial position, it won't fit there. So just type SOFP in capital letters. So it's supposed to read unallocated SOFP. Let's type unallocated SOFP. Right? Are we there?
Yes.
Right? Then share capital, we are not changing anything. Retained income, it's retained income or what? It's also called profit. Are you together? Stroke profit. In case some of you do not know what's retained income, retained income is going to be our profit. Then we've got shareholders loan. We are not changing that. Then long-term borrowings. What are long-term borrowings? What's the new term of long-term borrowings? Mr. Left hand. What's the new term for long-term borrowings? These are non-current what? Liabilities. Are you together? Non-current, delete long-term borrowings. We are editing on this section. Are you together? We are editing on this section. So delete long-term borrowings and put non-current liabilities. Then we've got other long-term liabilities. Delete other long-term liabilities and put other non-current liabilities.
Other non-current liabilities.
Yes. And you are having long-term borrowings, which are same. What are borrowings? They are same as what? Liabilities. So we've got long-term borrowings and other long-term liabilities, which is good as same as non-current liabilities and other non-current liabilities. Then we're having fixed assets. What's the new term for fixed assets? Non-current assets. Non-current assets. Then we have investments. We are not changing that. Then we are having other fixed assets. What's the other? The new term for other fixed assets? It's other non-current assets. Then we have inventory. We are not changing inventory.
We are left behind.
Pardon?
We are a bit behind.
What's the problem?
We are still trying to type.
Please, let's use both hands when you are typing. Please, let's use both hands. The moment you use one hand, you take time. Right, are we there?
Yes.
All right, we are now on accounts receivables. Right, on accounts receivables, the umbrella term for accounts receivables is debtors. Because we have accounts receivables and notes receivables. All these two fall under debtors. So if we're having notes receivables, where are we going to put notes receivables if we are only having accounts receivables? So let's put the umbrella term debtors. Then we have got bank, we are not changing that. Other current assets, we are not changing that. Then we have got accounts payable. The umbrella term for accounts payable is creditors. Delete accounts payable. When you are deleting, just highlight the whole name. Are you together? For example, just highlight the whole name. Then you type. Other than deleting manually, pressing backspace, it will take much of your time. Right? Then we are having other non-current liabilities. Other current liabilities, we are not changing it. Then we have got unallocated income statement. An income statement is now called statement of what? Comprehensive income. If you try to type statement of comprehensive income, it won't fit. So just type unallocated SOCI. That will denote statement of comprehensive income. Statement of comprehensive income. So just type SOCI only. Right? Are we done? Right? On sales, we are not changing anything. Cost of sales, we are not changing anything. Other income, not change anything. Expenses, tax, dividends, we are not changing anything. Right? Please take note that this is going to be the nomenclature of our financial statements. Are you together? We are going to be having our statement of what? Financial position. Are you together? Which is our balance sheet. Our balance sheet will be starting with our share capital. This is the British way of presentation of what? Financial statements, where it's having the share capital, retained income, long-term borrowings, the non-current assets, inventory, debtors, bank, other current assets, creditors, taxation, then other current liabilities. But I know you are now used to this statement of comprehensive income. If you still remember the format of your statement of comprehensive income when you are doing your accounting 111, it was sales less what? Cost of sales. Are you together? Then you add other income to get your what? Your gross profit. Then after adding other income and getting gross profit, you say less expenses. The amount that you get after subtracting expenses, it is going to be your profit before what? Tax. Then you say less what? Tax. When you say less tax, this is going to be your profit after tax or the net profit. Then from this net profit that you get after subtracting your tax, this is where you get the what? The dividends that are going to be shared from that tax. Are you together? From that profit after tax. So that's how we are supposed to edit your financial categories that you will be having. When you are done, you can click on next. Then It will ask you, do you want to save your changes? Say yes. Are we there? Then we are now on setup report writer category. So access mode, we are not changing anything there. Click OK, or you can go to next. Right now we are on setup entry types. That is for our cash books. We are having CB1 payment. That is cash book 1 payment. Our cash book 1 payment will be done using what? Petty cash. Are you together? We are going to be using petty cash, and then our cash book 1 receipt is going to be what? Petty cash. Then cash book 2 payments. If you click on cash book 2 payments, it's going to be our bank, the one that you are using. For example, myself, I'm using Standard Chartered Bank. So that's going to be our cash book 2 payments. All my payments, I'll be doing what? I'll be doing it through Standard Chartered. Then cash book 2 receipts, I'll be receipting all the receivables, all the transfers that will be done to me to be through the what? The bank. That is going to be our cash book 2 payment. So if you didn't do it correctly, when you are doing the initial setup of your company, you will not see these CB1 or CB2, cash book 1 or cash book 2. Are you together? So we are not changing anything. You can click on next. Right, we are now setting up the period. Which month are we in, by the way? We are in March, and so number of periods, we had put it at what? At 12. If we had typed 13, we're going to see what? 13 there. Our current period is what? We are in March now, from 1 March to 31 March 2019. So meaning to say we are in period what? 3. So on current period, type 3. On current period there, type 3. Are we there? Then when done, click next. Then to say, do you want to save your changes? Say yes. Right, now we are on setup text general settings. On processing method, these we do not change anything. On early payment terms, we are also not changing anything there. Then on default entry method, make sure all your what? Everything is on what? Inclusive. That is, it's going to be on text inclusive, right? Together. So make sure you choose inclusive. Then that's our parameters. Then let's come to percentages. We had said we are going to be editing the following taxes that we are having. We are having VAT, exempt, and zero rated. Are you together? Right? So let's type under description, line 1, type VAT in capital letters. Then on tax, our VAT is what percent? It's 15%. Type 15. Don't put the percent because it's already there on top. Right, press tab key. On start date, the start date is 01/01/2015. Right, just type, hello, don't delete anything, just type 01/01/15. Then press tab key. Type 01/01/15. Then on end date, it's 31 December 2018. So just type 31/12/18. Yes. Hello? Aisikutaipa? On description, type VAT.
Okay.
Where are you having a challenge?
Am I changing the way I like?
There, just type 010115. Don't delete anything, just type. Then press tab key. Are you managing, sir?
Yes, sure.
Then on end date, just type 31, that is that one, then 12 for December, then 18 for the year. Are we there? Hello, sir. Have you managed?
Sure, sir. Sure.
All right. The next text setup that we need to do is exempt. We are doing exempt. So type EXEMPT for exempt. Then tab key for text, it's 0, so we are not editing anything. Then the start date, let's also put the one that we put for VAT.
Should the word exempt be in capital letters?
In small letters. It's capital letter in the first letter.
Okay.
Then the start date, it's 01/01/15, end date 31/12/18, like what we did earlier on for VAT. Are we there? The next one, it's 0 rated. We are on 0 rated. So type 0 rated. Capital letter Z and capital letter R. The tax percentage is what? It's 0. So we are not changing anything. The start date, let's put 1 January 2015. So 01/01/15. And the end date, 31 December 2018. Are we there? Then when done, click on next. It will ask you, do you want to save your changes? Click yes. Please, let's not write notes. No need of writing notes. All these videos I'll give you, please don't write notes. Don't write notes. Mr. Lieutenant, I'm seeing you there. He's my friend. He's my friend. So I'm going to answer everything that is happening in class. Right? So we are done with our setup for text. Right? Now we are on text manager, on text reporting frequency. It's showing no reporting frequency really selected. Let's choose monthly based on calendar month. That is category C. Just click on this down arrow key or just click inside there. We've got different categories how you are supposed to report for your text. We have 2 monthly ending at every odd, 2 monthly ending at every even, monthly, semi-annual, annual, 4th monthly, and quarterly. Let's choose monthly. That is category C. So it will be showing from, for example, on this one, 1 January 2019, it will report from 1 January 2019 to 31 January 2019. When you're done, click OK or next. Someone is having a challenge. Are we there, class?
You are saying the start date should be what?
1 January. I know it's starting 1 January 2018 there, but it's showing you from first day of that month up to the end date of that month.
It's showing 1 November, sir.
No problem.
Oh.
No, but it's showing 1 November to 31 November.
No, we needed to scroll out.
All right. All right, click OK or next. We are on EU setup. We are not under EU, and we are not under EU, and we are not dealing with the EU currency. So click on next. Right, we are now setting up our customers control accounts. Are you together? We are setting up on customers control accounts. Please, you need to be careful on these ones. If you do not set up customers very well on this stage, whenever you are selling anything to your customers, you'll be having challenges. So some people are having challenges. They do everything and then they don't set up customers correctly. Then they come out of the exam saying, the exam was very easy. The exam was very easy. Then they get a D or an F. Then they make noise that, what happened? It's all because you have not set up things correctly. Are you together? Right? On control accounts under configuration, we are not changing anything. Then same applies to interest. We are not changing anything. Right? Then I'll ask you to tick where it's written on overdue when invoicing. For example, you are giving a customer a credit. When that customer is having an overdue invoice, it will warn you that this customer is having an overdue invoice. Therefore, you decide, you can make an informed decision. Should I continue giving this customer a credit or not? Are you together? Then on text, on document lines, assume you have purchased something from Pick n Pay. On the text that you have paid, what would you want to see? Do you want to see text percentage, text amount, or no text printing? Nalo?
Text amount.
Text amount. So choose print text amount. Right? Do you see here on default text type financial lines? Click on the down arrow to choose VAT. Click on the down arrow and choose VAT, which is 15%. So whatever we'll be selling to our customers, it will be showing VAT 15%. Are you together? So that's that for configuration. Then let's come to statements here. On statements, we are not going to be changing anything. Let's come to defaults. Come to defaults there. Are we there? Right? When we're doing the initial setup on normal payment terms, we say it's how many days? 30 days. We are not changing anything. On price list, we say the most common is what? Wholesale. Are you together? We're having different price list there where the retail, wholesale, and stuff. And we had chosen the most common is wholesale, so we are not changing anything. Then on printing, if you come on printing, if we were having maybe our customers are having maybe emails, you would either print, the moment you print any document for the custom, it will automatically email that document to the custom. Are you together? Or you can choose email document. You won't be printing anything, but you'll be just emailing the documents. If a customer says, I want my can I see my statement of account? You just email the document. Are you together? Or at times, the moment you print, if they say we want a hard copy, you print, and then the moment you print, it will automatically send an email. But for the class purpose, we'll just be printing the document. Same applies to statement printing. It's print document. Then statement messages, we are not changing anything there. Then when we come to processing method, our statements are supposed to be open item. That is showing from the time we started business other than from the beginning of the what? Of the current year. Then the tax entry method is supposed to be what? Inclusive. Choose inclusive on tax entry method. Choose inclusive on tax entry method. Right, on category other, we are not changing anything there. Then on freight method, if you are having the different freight methods of you to your customers, that's where you choose the what? The freight method that you do to the what? To your customer. Or if it's ship or deliver, that's where you put up the items, right, together. So that's that for default. Then description, we are not going to change anything. Then rounding, we are not going to change anything. Then click on OK. You can either click OK or next. It will take you to the next step. Right now we are on customer documents. We're on customer documents. When you are selling anything on credit to a customer, the first thing that you are supposed to give them is a quotation. A customer will come to you and request a quotation. Are you together? After giving them a quotation and they tell you that they need those goods that you have quoted them, you give them a what? A sales order. Then when you deliver those items and you want them to pay you, they will not pay you until or unless you have given them a what? An invoice. Are you together? After giving them an invoice, that's when they are going to what? Pay you. They will pay you using an invoice. Then after you have paid them, you are supposed to, after they have paid you, in fact, after they have paid you using your invoice, you are supposed to give them a what? A receipt. Are you together? Assume there are goods that have been returned to you by the customer. You offer what? A credit note, or you have given more goods than they needed, you give them a debit note. Are you together? Or you send them a debit note that will be showing the what? The balance on their accounts. So this is a control system that we are having with this system. You start by always, same applies to your companies. If you are selling on credit, if someone comes and say, we want these goods, you give them a quotation, they make a decision, you also give them a sales order, then they say, we want those goods. You take those goods, including with what? The invoice. They are going to pay you using that invoice, and you're supposed to give them a what? A receipt. So these are the setup, the customer documents that we are going to be using in our what? For our class purposes. So we are not going to change anything. Click OK. Sorry. Right? We are now on setup suppliers control. We are on setup suppliers control. On control accounts, we are not going to change anything. We are not changing anything there. Then on document lines, like we did on customers, we choose print text amount. Choose text amount, print text amount. Right? Print text amount. Then the default text type for financial lines, it's VAT 15%. Right, we are done now with our configuration for suppliers control. On remittance, we are not changing anything. Let's come to defaults. Right, on defaults, normal payments, we'll assume that our payments to our suppliers is going to be 30 days. We are not changing anything there. Then on processing method, all our statements are supposed to be open item. Text entry method, choose inclusive. Then on description, we are not going to be worried about that. Click OK. We are now on setup supplier documents. Right, on supplier documents, before you purchase anything on credit from a supplier, you give them or you send them a what? Or you place an order. Are you together? You place an order, and when they supply the goods, give them a goods received note, then you're supposed to get a what? An invoice from the what? From the supplier. Do you see this is the invoice of our what? Of our customer documents. Are you together? So we are not changing these documents because they are already there in the what? In the system. So we are not changing anything. Click on next. Right, we are now on setup inventory. We've got price list 1, retail, price list 2, wholesale, price list 3, staff. We are not changing anything. Then maximum selling price, that will be having. This is where, for example, you have put, you are editing credentials for an accounts clerk. This is where you put the limits. That's where you can limit the what? Your accounts clerk, their maximum selling price maybe it's supposed to be $900. Their purchase price for them, $900. If they exceed that, the system will refuse for them. Are you together? So someone is supposed to be doing that instead of the what? Accounts clerk, or someone will be or not on an attachment. Then the decimals for quantity, cost price, selling price is going to be 2. We are not changing anything on inventory. Let's click on next. Right, so we are done for our setup for the what? For the custom. So I request you redo this procedure that we were doing, redo the whole procedure that we were doing for the other company that we opened. By the way, what was the name of the other company that we opened? Right, try to redo the whole procedure of the other company that we were doing. So if your other company is, for example, is text, you just click on file, text, it will take you to that company. Straight away, you enter the password. Then you can redo the what? The procedure that we were doing. Right together. As you can see, I'm now on this company text straight away, other than closing the company that you are in. So try to redo all the procedures that we were doing.